1929. The stock market collapses 89%. Fortunes vanish overnight. Suicides, breadlines. The Great Depression begins. But one man walks away with $50 million in profit. 1987. Market crashes 22.6% in a single day. One trader makes $100 million that day. 1988. Financial system implodes. A handful of investors make billions. Right now, Warren Buffett is sitting on $325 billion in cash, the largest war chest in history. He's making the exact same 3 trades that made fortunes in every crash for the last century. Not similar trades, the exact same pattern. And if history is any guide, we're 12 to 18 months away from the next collapse. Let me take you back to 1929, the Roaring Twenties. America is unstoppable. The stock market has tripled in 5 years. Everyone's getting rich. Shoeshine boys giving stock tips. Housewives borrowing money to buy shares. Margin debt hits 90%. People are borrowing $9 for every $1 they own. Joseph Kennedy sees something nobody else sees. He's a ruthless speculator. Made millions manipulating stock prices. He knows how the game works, and he knows the music is about to stop. Summer 1929. Kennedy starts selling. Quietly, systematically. He's converting everything to cash. September 3rd. The Dow peaks at 381. Kennedy is out. 7 weeks later, Black Thursday. The crash begins. Over 3 years, the market falls 89%. Millionaires become homeless. Banks collapse. Entire family fortunes erased. But Kennedy? He's protected, wealthy, ready. That was the first trade, but he didn't stop there. And neither will you when you understand this pattern. Here's what most people don't understand. Crashes aren't random. They follow a mechanical sequence. Stage 1, bubble. Prices disconnect from reality. Stage 2, euphoria. Everyone believes it's different this time. Stage 3, maximum leverage. Everyone's borrowing to buy more. Stage 4, the trigger. Something causes a small decline. Stage 5, forced liquidation. Margin calls, panic selling, death spiral. Stage 6, collapse. Markets fall 30, 40, 50%. And the investors who see this coming, they make 3 trades every single time.
Trade. 1. The cash conversion. 1987. Paul Tudor Jones runs a successful hedge fund. By mid-1987, he's deeply concerned. The Dow has risen from under 1,000 to over 2,400 in 5 years, a 140% gain. August and September. Jones systematically sells his stocks, converts to cash. He writes memos to his investors. I expect a major crash by October. Not vague, specific. October 2nd. The market peaks at 2,722. October 19th. Black Monday. The market falls 22.6% in one day, the largest single-day percentage decline in history. Jones is already out, protected, ready for trade, 2. 2008, Michael Burry converts to cash in 2005. John Paulson in 2006. Buffett raises $60 billion by 2007. They see the housing bubble. They exit before the collapse. And right now, Buffett's $325 billion in cash. Jeff Bezos, $13 billion in Amazon stock sold. Mark Zuckerberg, billions in Meta sold. Jamie Dimon, first stock sale ever as J.P. Morgan CEO. Trade 1 is happening right now. The smart money is exiting. Trade 2, the gold hedge. But here's the problem with cash. When crashes happen, governments panic. They print money. Unlimited money. Your cash loses value. 1929. Bernard Baruch doesn't just hold cash. He converts substantial positions to physical gold. 1930. Roosevelt devalues the dollar, revalues gold from $20 to $35 per ounce. Anyone holding gold? Instant 69% gain in dollar terms. 1987. Gold jumps from $300 to $475 during the October crash. A 58% gain. 1988 gold is $600. By 2011, it hits $1,900. Triple your money while stocks go nowhere. John Paulson makes billions from his mortgage short, then deploys massive capital into gold. He understands. The Fed's response will be money printing. Money printing means currency devaluation. Currency devaluation means gold appreciation. His gold fund makes billions more. And right now, central banks are buying gold at unprecedented rates. 3,000 tons purchased in the last 3 years, the highest 3-year total since records began in 1950. China, Russia, India, Turkey, Poland, Singapore, gold is trading at record highs. Why? Because Trade 2 is active right now. Trade 3, the Volatility Bet. Trade 3 is where fortunes are made. October 19th, 1987. A documentary crew is filming Tudor Jones. Jones has bought massive positions in put options, bets that pay off when markets fall. He spent millions in premiums, waiting. The market crashes, 508 points, 22.6%. His put options explode in value, $100 million profit. One day. His fund is up 62% in October alone. The documentary captures the most perfect execution of Trade 3 ever filmed. 2008. Michael Burry can't short mortgages directly. The instruments don't exist, so he creates them. Credit default swaps, insurance on mortgage bonds. For 3 years, Burry pays premiums, 2 to 4% annually. His investors are furious. They think he's insane. The housing market keeps rising. Then 2008 hits. The bonds default. Contracts Burry bought for a few million pay out hundreds of millions. His fund makes over $700 million. John Paulson executes the same trade. Larger scale. $15 billion in payouts. He personally makes $4 billion, the biggest payout in hedge fund history. So where are we right now in 2025? Trade 3 is being executed as we speak. Credit default swaps on commercial real estate have spiked 300 to 500% since 2021. Why? Office buildings sitting 40 to 50% vacant, permanent remote work, mortgages maturing at 3% interest, must be refinanced at 8%. The math doesn't work. Defaults are inevitable. Large institutional purchases of put options on the S&P 500 and NASDAQ. Expiring late 2025 and 2026, the put-call ratio is elevated above 1, more puts than calls. Institutions are buying insurance. They're hedging, VIX call options, bets that volatility will explode, large purchases throughout 2025. Bill Ackman has discussed hedges similar to his March 2020 trade, when he turned $27 million into $2.6 billion. In weeks. The 3 trades are active, which means, based on historical patterns, we're 12 to 18 months before the crash. Late 2025 or 2026. The trigger could be commercial real estate defaults, a major bank failure, a geopolitical crisis. The specific trigger doesn't matter. What matters is what happens next. Markets fall 20 to 30% in weeks, then another 20 to 30% over months. The S&P drops from current levels around 6,600 to 3,500 or lower. Unemployment spikes from 4% to 9%. Regional banks fail in clusters. Every headline predicts the end of capitalism. Gold surges to $5,000, maybe $6,000 per ounce as the Fed prints unlimited money. And when that happens, when panic is maximum, when it feels like the world is ending, that's when Trade 4 happens. You deploy everything. The cash you protected, the wealth you preserved, the profits you made. You buy Apple at 50% off, Microsoft, Visa, Johnson & Johnson, quality companies with strong balance sheets, low debt, products people always need. This is what Buffett did in 2008. $5 billion into Goldman Sachs. at the absolute bottom. This is what Ackman did in March 2020. Used his $2.6 billion payout to buy crashed stocks. Then you hold for 5 to 10 years. Your positions triple or quadruple. Trade 4 creates generational wealth. But you can only execute Trade 4 if you successfully executed Trades 1, 2, and 3 first. So here's your choice. Most people will ignore this. They always do. They'll believe this time is different. They'll believe AI changes everything. They'll believe the Fed will save them, and they'll lose 30 to 50% of their wealth, just like 1929, just like 2008. Or you can execute simplified versions of these trades. Raise 30% cash, your dry powder, buy 5 to 10% physical gold or gold ETFs. Buy put options 10 to 20% below current prices. 6 to 12 months out. Prepare psychologically, have a list of quality companies you want to own, and when the crash comes, when everyone's paralyzed by fear, you buy aggressively. That psychological fortitude, the willingness to act when fear is maximum, that's the real secret. Kennedy had it. Jones had it. Burry, Paulson, Buffett, Ackman, they all had it. The 3 trades aren't secret. They're not insider information. They're a documented historical pattern. And that pattern is repeating. Right now, the crash is coming. Within 18 months. The only question is, will you see it? If this opened your eyes to a pattern you'd never seen before, hit subscribe. Because over the next 12 to 18 months, I'll track every signal, every insider sale, every gold purchase, every warning sign. You'll see the pattern unfold in real time. Drop a comment. Are you positioning for the crash or riding it out? Because when it happens, when it's already underway, it's too late. The trades have to be made before the crash. That's the whole point.